Wealth with Gary Quackenbush is sponsored by the Word on Wealth Radio Network.
The airing of this program by this station is not an endorsement or recommendation by the station of the products or services discussed in the program. The station does not guarantee the results of any investments made by a listener to this program.
This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney, protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now, here's Gary.
All right. So you've heard about a reverse mortgage and you just wonder, what is that all about? And why are people so worried when they hear those words? I'm here to dispel those myths. And here on the Word on Wealth, we have our regular Tuesday show partner with me, and that is Shanne Sleder. He's a mortgage advisor, a mortgage expert. He knows everything you need to know and I need to know about mortgages, specifically reverse mortgages. And that's what we're going to be talking about today. Hey, Shanne, how you doing today?
I'm doing well, Gary. Thanks for having me on. I'm really excited to talk about the important topics we're going to be talking about today.
You know, I always look forward to Tuesdays because I have so many questions I have my own. And I know we have kind of our list of things we're going to go over, but I just always have so many questions because I run into it, constantly where, we're talking about, people are sitting on homes with, huge amounts of equity. And it's like, well, what are you going to do with the equity? Are you going to be house poor forever? You're going to be able to tap some of that equity. And then I get into the options and I say, and here's one that I really like, and that is reverse mortgage. Goes quiet. And I go, you guys, listen to the show on Tuesday. Reverse mortgages can be an awesome solution to pulling equity out of your house to survive and live a good life. And that's why I'm just glad that we have you as our mortgage expert coming on and talking about it. So I would love it.
Well, I'm happy.
Let's do, we're going to talk a lot about medical costs, which to me, it's, as people get older, the medical costs, you just have that looming over your head that it's going to get higher. I mean, that's just a fact. It's not a if it gets higher, but it's kind of when and how do we get prepared for that. But I want you to just take a few seconds here and just talk about, like, off the top of your head, like, what is one of the best things about reverse mortgages?
I think one of the best things is the fact that it allows clients, seniors, to be able to tap into an asset that we've been blessed with here in Southern California, especially, that has grown over time. If you look back, many clients who, bought their house 20, 30, 40 years ago, and they maybe spent $100,000 on it. Now it's worth $900,000. And we've had such great appreciation. And now it is an asset that they can use to retire in a better lifestyle, to be able to take care of some of the needs that they have, whether it's for health reasons or retirement reasons. And they didn't have to do anything in order to get this appreciation. It just came because of where we live.
And I love that is available. And because I'm a big option guy, I really want to know options. And that's my thing. And I know you and I have had this conversation about the biggest thing. It's like, it's kind of, we're like option nerds, right? It's like, we want people to understand, like, what is available. Like, here are your options. It's not one thing. It's not this one thing. It's like multiple options. And then when you can bring in this, gosh, what are we going to do with, the money and finances and investing and all that? And then you're sitting on this massive amount of equity. It's like, what can I really tap into that equity and get the use of it safely and not, have this crazy myth where people go, oh, if you get a reverse mortgage, you lose your home. And to me, I don't want to laugh, but it's like, guys, that was like 50, 60 years ago when that myth was brought out. It's like, it just doesn't exist anymore. It just doesn't. So like the main myth of, oh, you're going to lose your home with a reverse mortgage, I think that's just gone, guys. We're not talking about that anymore. It just doesn't happen. I do want to get into this specifically is, Shanne, you have some statistics, which to me, I believe them because I've seen it, but to me, it's almost like crazy, like adults that end up having, increased healthcare costs, or people that are going to end up, give us some of the statistics about that, about people that are going to run into, more healthcare and stuff like that.
Well, we know that as the baby boomer generation is getting older, that we are going to have a lot more need for healthcare, memory care, in-home care. And what's happening is, just like everything's getting more expensive. Medical in general is getting more expensive, but we just don't have as many people as we need to help with some of these in-home care, memory care. And so the cost of that is going up as well. And so when you look at, what it may cost to have in-home care on average, you're probably at $5,000 to $7,000. And that's really for a situation where you're not needing a lot of medical help. And if you then look at assisted living situations, you're probably more on average, $7,000 to $11,000
Wow.
for needing to go into an assisted living facility. And what we're seeing in the most recent stats came out is that 1 in 10 adults 65 and older are going to have some form of dementia or Alzheimer's and need care. And as you go up to 85 or older, that increases to 32% that are going to have Alzheimer's or dementia and need some sort of care.
So the chances, literally, if you look at that, the chances of a couple that are over 65 or a couple that are over 85, that literally for the family, that doubles those chances. It's 2 in 10, and it's 64%, chance that one person in that couple is going to have dementia or Alzheimer's. And
2 minutes.
What we're going to talk about, and you guys, this is where we really want you to stay focused in the rest of the show. We're going to be talking about a couple of different things, like, are there timing issues? If you're thinking about reverse mortgage, if you're thinking about, trying to take advantage of the equity that you have in your home, are there timing issues? And that's the thing that Shane and I are going to talk about. There are some really critical timing issues that if you're too late, it's not available. So we're going to be talking about that coming up next as we continue with the show. I want you to have Shane's contact information. It's Shanne Sleder, and Shane has 2 N's, Shanne, Sleder, Sleder. The way to get a hold of him, the easiest way, is his phone number is 858-683-1716. 858-683-1716. And if you want his free book, he has this guide on reverse mortgages, which is really cool. Easy read. Everybody should have it. It's that same number, 858-683-1716, but text the word reverse, and then they'll get you out that free book. So it's a short book that explains reverse mortgages. It's something you got to have in your repertoire. Website, SanDiegoMortgageNews.com, and you've got his phone number. So that's pretty much what you need to get a hold of Shane. Anything reverse, anything mortgages, conventional mortgages, reverse, and all those things, he knows it, and his team, they're phenomenal at this kind of stuff. We're going to be taking calls when we get back from a really short break. And we'll be taking calls. We're going to open up the lines. That's coming up next, like in about a minute here. And we're going to be going over some timing issues, critical timing issues that you really need to listen to and have that information in your head when you're making these decisions. You got the Word on Wealth with Gary Quackenbush and Shanne Sleder, and we'll be back after this break.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com, 855-500-TRUST.
You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is Faith-Based Investing with Anthony Wright.
Most Christian families don't understand this one thing. The money that you're saving for retirement helps fund the abortion industry as well as other liberal anti-family causes. It's the sad, dirty little secret of American investing world. And here's the good news, though. You probably also didn't know that just a few minutes of your time, and we'll screen and clean your investments for you. There's no cost, no obligation. Learn the truth about your own investment mix. Then the choice is yours. Remember, the word says when God's money is in the hands of the righteous, the people rejoice. Well, we also are fiduciary investment advisor representatives. That means that our firm makes a pledge to always act in your best interest. Go to BibleSafeInvesting.com Download a free copy of my book, Faith-Based Investing, or call me at 931-RETIRED. And please don't forget, listen to Faith-Based Investing this weekend right here on Family Talk.
So Gary, we've talked a long time about estate administration. So what is that and why is it important?
Estate administration is the distribution part of estate planning. So when someone passes away and they leave money to beneficiaries, the property has to be administered. So it's like taking it from the decedent to the survivor. That's called the estate administration process. So usually you're going to have a successor trustee that's named in the trust. They'll have no idea what they're doing because they've never done it before. So then they call on GQ Law and we walk them step by step on how to be a successful and good successor trustee. We also do the required notifications. We notify the Department of Health Services and all the legal requirements so that they can have the estate administration done properly. We help successor trustees be successful.
Call or click to request your free consultation. GQLaw.com, 855-500-TRUST, GQLaw.com.
Who will you trust with the biggest financial decision of your lifetime? If you're planning to buy or sell a home in San Diego County, do what I do and work with the true San Diego real estate experts. Ken Pecos and the Pecos Group helped me and my family. They can help you. This is Gary Quackenbush of the Word on Wealth. You hear Ken every week here on the Word on Wealth. He's our expert. He's got integrity, exceptional service, deep knowledge of the San Diego, Coronado, and South Bay regions. These are just some of the reasons that Ken Pecos has completed hundreds of transactions. He manages a powerful team of professionals at the Pecos Group. From single-family attached homes to luxury high-value waterfront properties to apartment buildings, Ken Pecos is ready to help you avoid problems and costly mistakes. Learn more online at kenpecos.com. That's Ken Pecos, Pecus.com. Or call 619-977-8419.
DRE number 010566969, brokered by eXp Realty.
What aren't we being told about the COVID-19 scenario, about covert
You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's GQLaw.com, 855-500-TRUST.
All right. I've got some questions for Shanne Sleder. He's our mortgage advisor here on the Word on Wealth. You've got his contact information, 858-683-1716. The question I have, there's a couple of things I want to do, Shanne, if you would, please, is one, talk to us a little bit about, we want to get into using a reverse mortgage to help with medical costs. And you know, because we're talking about those increasing and going up and having, 1 in 10 adults over 65 having dementia or Alzheimer's, gets up to 32% when you're 85 or older. It's going to double all those numbers if you have a couple affected. So I want to talk about, what do you mean when you say maybe reverse mortgage will be available for medical costs? I want to talk about that, but I want to for sure address the issue of timing. Like, when can that be done and when is it too late? So go ahead.
Sure. Well, let me just give you a quick story, Gary, of a couple that I helped recently going through this. And it was a wife and the daughter reached out to me. Her husband had been diagnosed with dementia, had actually fallen recently, and now was going to have to be in a memory care facility. But, she had lived in the home for 40 years. All of the memories she had was in that home of her husband, of her kids. And she still needed a place to reside. She didn't want to have to sell that house to be able to pay for the long-term care and memory care. And so they turned to me. They wanted to know if a reverse mortgage would be an option for them. And what we were able to do is we were able to tap into the equity, provide a line of credit for her so that every month when she had the bill and the cost from the memory care facility, she could tap into that line of credit, pay for it, not have any monthly mortgage payments, but still be able to reside in the house and not have to, already having her husband in this facility was a big enough change for her, not having to have her have to move out as well and make additional changes. But what happened was, because of the fact that we had done this after he was already diagnosed with dementia, there were some extra steps we had to go through. We had to make sure that they had a valid power of attorney in place so that she could take out the reverse mortgage on his behalf. And in order to make sure it was a valid power of attorney, we had to make sure that it was done prior to his diagnosis. And we had to go back to her doctors or his doctors and have them provide letters explaining when he was diagnosed with dementia, and that at the time they did the power of attorney, he was mentally sound, and now he no longer is. And so in many cases, we can do that. It does make it more complicated and takes more time. But there's been cases where I've had kids come to me and say, we really need to have some way to tap into this equity so we can pay for the care, and they don't have a power of attorney in place. Mm-hmm. And so we're stuck. There's nothing that we can do. And so that's where the timing is so important, is that either you've got to have the power of attorney in place and make sure that it was done prior to the dementia, which in many times you don't know when the dementia is going to come on, or you need to have the reverse mortgage done prior to the dementia.
Okay. And that's what's really critical. And that's where it kind of falls into my arena. In fact, you and I have had a conversation on this very issue, like what kind of power of attorneys do they have? And this story, it just rings so true in so many different cases where it's, I hate, and I know you do too. I mean, what does it feel like as you have a solution, but you're going like, you're too late. There's no valid power of attorney, and your husband's got dementia and the doctor's already determined that. And what I see sometimes too, Shane, is that people are just trying to self-help and do the best they can, but they wait so long that then they get desperate. And then they say, oh, we really are in tough states. Let's look at some other options. Let's go to an attorney. Let's, talk about doing a reverse mortgage. And sometimes it's too late because they needed to talk to a guy like me much earlier to get a power of attorney while they still were competent. Because if there isn't a power of attorney, it's California and there's husband and wife own the house together. They both need to either sign the document or have their power of attorney sign the document. So it's just, there's these steps that are so frustrating. But if you don't have those power of attorneys, then what we do is we have to go to probate court to get a conservatorship over this. In this case would be husband, a conservatorship over the finances. And you think, God, that's insane. Why would a wife have to go to court to get a conservatorship over her husband? Well, Shane can answer that. That's just the law. So you get a conservatorship, big, long process, very expensive. And then you go, hey, we have letters of conservatorship. And now wife can talk to Shane and say, now can you help me? And it would be, yes, that was a very long, drawn out process. They weren't prepared.
Yes, and it's heart-wrenching. When I had the couple, the children that called me on the one scenario that we were not able to help them. I mean, basically their only option was to sell the house. But then, in this case, the father was going to be out without a place to live, just to be able to pay for the care for the mom. So when we are able to help them, I mean, it's life-changing. It allows them to continue to enjoy their life, get the care that they need. And whether it's, in-home care or whether it's in another facility. I mean, in any situation like this, tapping into that equity is a great way to do it. But what I think we want clients to think about first is looking at a reverse mortgage almost more like an insurance product, where you get it before you need it because in the future you will need it. I mean, just like life insurance, long-term care insurance, any of the things that we do, we pay for that premium because we know there's a chance we will need it in the future. And so a reverse mortgage can be done in the same way. You can get it as early as age 62. Your home doesn't need to be paid off. You do need to have substantial equity in it, but you can get it, you can establish it. And the longer you have it sitting there, actually the better it is, because the reverse mortgage line of credit will grow over time to where you can borrow more when you get into your 80s and you have the memory issues and you need the care. Now you've got more money to borrow because it's been compounding over time. So the earlier you set it up, in many cases, the better to put yourself in a better position as a safety net if you do need those funds in the future.
Excellent. 2 questions then, follow-ups. One, so if I get it and I'm age 62 and I qualify and it's, X numbers because they all work out and I get, a certain amount of money that I can borrow. So even if I never tap it, I mean, there's no requirement that I immediately start taking money, right?
Correct.
Okay.
It can sit there as long as you want, and as long as it's sitting there, there's no payments required on it.
Okay. So then as I get older and now, I may be needing it, but my house, I mean, we're in San Diego. 10 years later, the house is worth, 50% more typically. Can I actually get that line of credit increased? Does it automatically happen? What's the process there?
So the great thing with this product is that the line of credit automatically increases every year based off of the growth rate that's tied to it. It's part of the way that FHA HUD set this program up. So as you get older, as the money is available, there'll be more money available for you. Now, if we have a huge increase in values, there are options to refinance reverse mortgages to tap into even more money, but the line automatically grows and you're guaranteed to have that growth regardless of what happens with the housing market. So even if the housing market was to go down, the line of credit that you can tap into is still growing.
Because it has a built-in growth rate.
Correct.
That's fantastic. Wow. You start to look into these options and I just realized, the more that I, speak to you about it, the more we kind of address this issue, the more I realize how important it is to have somebody like you on their team. If you're looking at, it's kind of, let's talk about the retirement team or the getting old team or the I'm over 62 team. It's like you got to have, you guys, there are listeners to the show is you need to have certain people that are on your team. It's not like you have to, you need a reverse mortgage like immediately, but have the knowledge and the understanding and do your research and talk to Shane about how it works. He's super good about providing education. That's why he's on our show, because that's what we do. We provide options and education for people. The easiest way to get a hold of him, 858-683-1716. 858-683-1716. And if you want to get that free book that he made, and it's about reverse mortgages, kind of reverse mortgage basics, it's that number, and you just text the word reverse to 858-683-1716 and think about it. You don't even have to talk to anybody. It's a text message, and we love text messaging. So text, there's no reason not to. 858-683-1716.
2 minutes.
Reverse, and you get your free book. Okay, Shane, it is time for the Shanne Sleder pep talk on reverse mortgages. So I'm going to give you 1 minute to give us our pep talk. We're getting that. We probably we should be thinking about reverse mortgages. Help us, give us a little pep talk on why we should be thinking about reverse mortgages. And maybe if it's our parents that should be thinking about it, how do we talk them into this, at least to that thought process?
Sure. So when you're looking at the reverse mortgage, especially if we're looking at planning for future needs, medical expenses, there's always an opportunity cost to everything. And tapping into your home equity, there is a cost factor involved with that, with the reverse mortgage, with interest growing over time. But instead of your children having to pay for your medical expenses or for you to run up credit
1 minute,
for you to go without in a situation where you need coverage because you don't have the money or you're tapping into your retirement account, you can now tap into your home equity, which is really just sitting there dead anyway without being able to tap into it and utilize it. So, what I found is that this program really becomes real to the listener when they're able to see how it can change their lives. And between the extra cash flow, the reduced stress that comes along with it, the freedom in retirement, that's when it really becomes real to my clients. And so, if the topics that we are talking about today relate to you, if you can see yourself in a position to benefit from this program, then please reach out and schedule a one-on-one with me. I'd love to, learn what your needs are and how we can customize this program to fit those needs.
Terrific. Well, there you have it, you guys.
10 seconds.
858-683-1716. Shanne Sleder, your reverse mortgage guy. Thanks, Shane. Talk to you next week.
Thank you.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQlaw.com.
Here's exciting news, announcing the latest addition to our team of experts here to serve you and make your financial life just a bit easier. Shanne Sleder is our new mortgage and home finance advisor here on the Word on Wealth. Be sure to listen every Tuesday at 2, have your questions ready, and learn how your current home and real estate investments may just be the most important game-changing keys to your financial future and retirement.
Thanks so much, Gary. I'm part of a team and a family serving our San Diego area neighborhoods for decades. We're your neighbors, and we have one goal: to provide financing that will fit your short and long-term financial objectives with outstanding personal service. Learn about what makes us different at SanDiegoMortgageNews.com or call us now at 858-683-1716.
Discover Shanne Sleder at Team Sleder at RWM Home Loans at SanDiegoMortgageNews.com. Licensed with the state of California. NMLS ID number 239958. DRE number 01174642.
Tell a friend about this broadcast outreach, The Word on Wealth, with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST. GQlaw.com.
You're listening to the Word on Wealth. Reverse mortgages. So many times people get, I don't know, they have an adverse reaction. They say reverse mortgage. Oh my gosh, it's a terrible thing. In fact, I think the most difficult part is when it's the it's your mom or dad, they're the ones that really need the money. They're the ones that are sitting on all the equity. They've been scrimping and scraping. And
Jim Robeson has a question for you.
okay. And you're trying to figure out how to teach them about it's just not a bad thing. They have equity in their house. It just kind of came out of nowhere just by growing, and they have a way to tap it and make their life better, easier. All right, I'd like to welcome Jim Robeson to the program. Hey, Jim, how you doing? Welcome to the Word on Wealth.
Thanks, Gary. Yeah, sorry I missed Shane's input on reverse mortgages, but I want to my 2 cents in and encourage our listeners from real life experience. And I've had a lot of conversations with clients regarding this whole scripts click, losing your doctor, and what are your options? And a lot of people are strapped for cash, but they want this permanent supplement plan, but they don't have enough cash. This is a perfect example of, if you have equity in your home, to solve this Medicare problem so you can continue to see your doctor. This is just one small example.
That's terrific. So you want to get a permanent supplement plan, but you don't have extra cash. You're just kind of getting by on what you've got, but you're sitting on this gold mine really of wealth, and you can get a reverse mortgage and get enough out of that to pay for the supplement plan. I love that. That's great.
And what it does, Gary, it makes permanent your plan for the rest of your life. And it covers you 100% in and out of the hospital, instead of relying every single year, hoping and praying and your fingers crossed that your Advantage plan doesn't change one more time and you lose one more doctor and your copays went up. Who wants to live that way as you finish your life?
Well, and especially Jim, and I appreciate you guys know this is Jim Robeson. He's our Medicare answer guy. He's one of our partners here in the Word on Wealth also. He and Shane, they go way back, and I just appreciate, Jim calling in and kind of pointing this stuff out, which is like super important. The thing about we just face it. Okay. As we get older, we don't want to make as many decisions. And sometimes our capacity, it's not that we lose our brain power or anything like that. Things just process slower. It's just part, of anything. That's just part of your life. I mean, your skin isn't quite as smooth and things happen to your body and you slow down a little bit, and everybody realizes that. And the last thing you want is these more crazy, complicated decisions. And it's like, and I'm not talking about let's tweak this or tweak that. It's like, oh, well, I'm sorry, you have no medical coverage starting, in 3 weeks from now. So good luck with that. Well, what if you aren't in a position to make that change or make that call? We were talking about that, Jim, at the beginning with Shane is, he ran into a situation where they really needed to get some legal process, to get a reverse mortgage or, to do anything. And the husband had dementia. And so it's like, well, too late. Now, I do want to say, and this is, it's fun that you called. I was talking to some friends of mine on Saturday, and they literally brought up what you just said. They brought up and they said, yeah, that Scripps Coastal and all that. And man, I got friends that are getting really just bent over backwards on this because they don't have coverage. I got to get a new doctor. And I said, yeah, how does that affect you? And she goes, it don't. I got me a permanent supplement plan. She's a funny lady. She goes, I got a supplement plan. Why would I have an Advantage plan? There's no advantage to that. Sure, a supplement cost me a few bucks, but I don't have to worry about this crazy news that comes out. And she was so funny. I went, wow, tell it like it is.
Exactly. So here's the reality, Gary, and it just makes your heart think. When somebody is in the middle of cancer, they're in the middle of something. They've got all kinds of script specialists working, and now they're going to lose their doctor because they're on an Advantage plan. We can solve that problem, but it's going to cost a premium, not a whole lot, but it's going to be more than the zero that you're paying for an Advantage plan. And if you have equity in your home and you're not using it, I'd pick up the phone and call Shane and figure out if it's possible so you can get on a permanent plan. And there's a window of opportunity here. It's not going to last forever. During open enrollment is when you can do this.
That's
So
coming up, right?
It's one of those things you don't want to delay on this. Open enrollment starts on Sunday, October 15th, and goes to December 7th. And so I know it's short notice, but if you got equity, there's the money. We can help you get a permanent plan, but the clock's ticking.
Okay, so on that, remember Jim's number. We don't care about his number. We care about his website. It's themedicareanswerguy.com. That's the easiest way. And people say, what's Jim's number? I go, I don't know. It's themedicareanswerguy.com. And they say, okay, that's good enough. And they look it up. So themedicareanswerguy.com, you could actually say, okay, Google, call themedicareanswerguy.com. And it actually will find that. It's pretty funny, but yeah, you can find Jim that way. But gosh, it's too bad it's too bad we didn't have you on yesterday. Probably should have had you on yesterday because that's right. Open enrollment is Sunday. But you guys, it's you got to call Jim on this stuff. And
well, I'll be on next Monday. So
okay.
We can review all that stuff.
So that's right. So Jim will be on the 16th, so you can call and get your questions answered. But in the meantime, if you want to kind of tee that up, not like Jim's going to be super busy during open enrollment. Oh my gosh, you're going to be buried. So just remember the Medicare Answer Guy. Jim, thanks for calling. This is a good, that's really a good kind of combo of our partners here on the show. All right. So if you're thinking maybe that would work out, supplement plan, but you're just a little too tight on cash. So then your first call should be to Shane, 858-683-1716. And then we'll hook you up with Jim. All right, brother.
All right, Gary,
thanks, man.
Talk to you later.
All right. Talk to you later. All right, guys. themedicareanswerguy.com. That was Jim. He's our show partner. Love to have him on. Super cool. Yeah, Medicare open enrollment's coming up. And so you can get on it's within 90 days of turning 65. That's when you're supposed to go and enroll for Medicare. So Jim will be on in 6 days. We'll have him on Monday. And we'll be able to have your questions answered on Monday. If you have questions in the meantime, go to themedicareanswerguy.com. Thank you, Jim. Told you we're all about education and providing options, and that's one. And now we got a couple other ones. On your estate plan. Okay, so we're going to take just right between now and the top of the hour. I want to go over a couple things. I'll finish up some of this stuff tomorrow. We're talking about, documents for your estate plan, what you need. I mean, you guys, I just do this a lot. I mean, I have people that say, review my estate plan, Gary, and I do. And you got some big old fat trust and I don't see the supporting documentation. I don't see the general durable power of attorney, springing power of attorney. I look at the healthcare and I go, are these decisions you wanted to make? There's things in your plan review that you get with me that I will look and see if you have all the documents you need. If you got your estate plan in the last year or two, it's not really necessary for me to review it unless you just really don't trust the person. If you want to make changes, to your successor trustee or your beneficiaries or who's getting what, how much, how fast, then yeah, let's look at it with the possibility of setting up an amendment. But if you had a trust within the last, 1, 2, 3 years, and you like the person who put it together, there's no need to review it at this point, unless you're thinking that there's something wrong or you want to make a change. But what I've been seeing is many of you have estate plans that are super old. I'm seeing, back in 2001, that's when I put mine first together, 22 years ago. It's like ancient, but I've restated it at least twice since then. So you just got to keep your stuff updated and you think, oh my gosh, I got to spend the money again. Well, whatever you spent on your estate plan, it worked. It served you faithfully up until now. Okay. And now it might be time to get something newer. Okay. Sometimes things wear out and it's just time to update so that you're comfortable that you've got the latest, greatest, up to datest. Let me talk about an interesting situation I've seen a couple times pretty recently on problems. And in fact, I had a conversation with an attorney a couple of days ago, and I was talking to him about certain problems. And what happened is the dad had died. It's probably like 10 years back, and mom had died about 5 years back. And now you had this situation where there's one of the kids is living in the house and another property is being rented out. There's supposed to be a A-B split way back when. And we're looking at this thing going, what are the problems with this situation? Mom's gone, dad's gone, it's been multiple years. There's a rental. There's people in one of the houses. What was supposed to happen? And what's the danger if you don't make it happen? Coming up next, we'll discuss that here on The Word on Wealth.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com, 855-500-TRUST.
Gary, your team at GQ Law are experts at solving IRS and state tax problems. Talk about that.
When people have a tax problem, it tends to really stress them out. And one of the things we've been able to do is figure out how to resolve tax problems. You know, one thing we might be doing is setting up a payment plan or getting a collection delay, maybe getting a determination that the person shouldn't have to pay the taxes at all. We do offers and compromise. We do audit reconsiderations. And one of the things that's a really powerful tool that some people don't recognize is sometimes bankruptcy can be used to actually eliminate taxes when there's certain conditions of the code that are met. So we can do all kinds of things. After we analyze your situation, we can figure out what's available, discuss your options, and figure out which ones to implement, what it's going to cost, how long it's going to take. And we can get people out from under all kinds of tax problems so they can sleep again. That's our goal.
Request your free initial consultation. gqlaw.com, 855-500-TRUST, gqlaw.com.
Hi, folks. Dave Stahl for Gun Owners.
For the legal help you need, call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs, call or click to request your free consultation or to talk with a member of the GQ team. That's gqlaw.com, 855-500-TRUST.
Documents. Okay, we're going through a scenario that I just to kind of illustrate some of the things that I'm seeing. So you have a situation, dad died 10 years ago, mom died 5 years ago. There's an AB trust. So it's supposed to be a split on dad's death. Nothing was ever done. Nothing was ever done after mom passed away. It's been 5 years. There's a house, there's a rental. Some of the kids are in the house. The rental, the property is being rented out, and it's been years. What are some problems I see? Well, number one, as an attorney, it makes me cringe to think that the possibility that there's no insurance on the property. And so I would look and try to determine if the property is insured, the rental. So what you would do is you would look at you'd contact the insurance person and say, hey, we have this rental property. We have tenants in there, and I want to make sure that we're covered with insurance. And they're going to say, who's the owner? mom and dad's trust. Who's the trustee? Okay. And when was this trust created? And is mom and dad still alive? No. Can I see the trust, please? Okay. The trust says after the death of the second trustor, which would be mom in this case, the trustee shall distribute in equal shares all the property to the kids. It doesn't say hang on to it for 5 years, hang on to it for 10, pretend like it's the major family trust. And there is a good chance that your insurance company is going to say, no, we're not going to insure this. Or there's a good chance that the insurance company will have already been accepting your premiums over all these years, not realizing that it wasn't mom anymore, but now it's the successor trustee because mom had passed away. And there's a good chance the insurance company, on receiving a claim from the tenant or somebody else wanting to be paid for damages, might very well say, hey, you guys tricked us. You never told us that your mom died. You never told us that it's in an irrevocable trust, an irrevocable administrative trust, simply waiting for the trustee to do their job and distribute the property. And 5 years is way too long. So we're not going to cover it. You guys tricked us. Now, if you had that conversation, who's the one that's going to be to blame? The only person really that has the legal authority to make the decision as to whether or not property is ready to be distributed or should be held in trust and all that, the only one that can do that is the successor trustee. So as the successor trustee, you realize that's your job, and you are the one, by not doing anything, may very well have set it up so that you're making decisions that you didn't really want to make. And that is, if there's some type of a claim, if there's an insurance issue and insurance won't pay it, or what about insurance not being high enough? Okay, when mom died 5 years ago, she was really frugal. In fact, when dad died 10 years ago, he had, the tightest insurance he could get because the house was worth, $500,000. The rental was worth $500,000. And so he had insurance on each one, $500,000. 5 years later, was mom watching the store and seeing that the value in the properties over that last 5-year period, they went from 500 to 750,000. How much is the insurance coverage? And I bet if you look, it's going to be $500,000, because most companies don't want to go above that without an umbrella. So you're underinsured when mom passes away. And now it's been 5 years since then. So now that 500,000, the house is worth 500 when dad died, and 750 when mom died, might be worth $1 million now. And if you look at your coverage, you may not even have enough to cover half the equity in that property. So these are the things where when you start keeping things in the trust for a long, long, long time, you as the successor trustee, you're required to protect the assets of that trust. And if that means that you're having to figure out how to get the insurance to increase, and now you go to the insurance company and say, whoa, this building's now worth $1 million. I want $1 million of insurance. And they look at it and say, who's the owner? The trust is, you're the successor trustee. Wait a minute. What happened to mom? Wait a minute. We're not going to insure that building, because you're going to have to go and get higher insurance. You're probably going to have to go, to, 5, 6, 7, 800,000, however much they'll give you, and then get an umbrella policy to increase the coverage so that it covers all of the property. Because if you have a rental property and a home in the trust, one other thing is that it's not your homestead, because it's not titled in the name of the individuals. It's titled in the trust. And so how do you claim a homestead if there's a lawsuit? There's just too many things that you should be worrying about if the house is held in the trust way after mom and dad have passed away. There's too many legal issues. My mom always told me and my siblings, I have a brother and 2 sisters, and she would always tell us, we'd be messing around and hitting each other and throwing each other around and stuff. And she'd always say, it's all fun and games until someone loses an eye. And it wasn't until I slammed a door on my brother. It was a French glass, the French window panes, this door, this really old house we lived in. I slammed the door on him, and it wasn't tempered glass when it broke into these razor sharp shards and ripped my brother's elbow. His forearm, basically. It was pretty gross. So my mom was upset, and she said, see, it's all fun and games until someone loses an eye. And now I've got to take your brother to the hospital. So my mom was right. And I look at that from a legal standpoint. It's all fun and games. You can do it yourself. You can have your own trust. You can set things up. You can do things kind of like, I think this is right. And it's fine as long as no one dies, as long as there's no claims against the insurance. It's all fun and games because you don't really know whether the insurance company is going to deny your claim because you just haven't, if you call them and ask them, and I've had clients that will call and I'll say, hey, call them. And they do. They call the insurance guy and say, oh, yeah, it's not a problem. We'll insure the house. For how long? Oh, it doesn't matter. However long it takes for you to transfer the house to, your siblings. Well, I don't believe that. I believe that's what the guy said, but I would like that in writing. And I would like it to every time there's a renewal, they acknowledge that the house is no longer in mom and dad's trust, but it's in the administrative trust on the way to the kids. Because I don't want the insurance company to come later and say, wow, had we known. And I just don't want to be uncovered because then the successor trustees at fault, at liable. And, there's who has the contract for the rental? Is that the trust? Yeah, that's the successor trustees issue. Now, if you need a tenant to be removed from the property because they're taking too long or they're messing up the property or they're destroying the walls or, whatever damage you're trying, just like normal, not paying the rent and you're trying to get them out, who's going to kick them out? Well, that's going to have to be the trustee of the trust. And if there's damages, well, what if the trust had been closed properly 5 years ago? We wouldn't be having this issue. It would be resolved and there wouldn't be damages. So remember, as the successor trustee, is the longer you keep this thing open, the longer it's your fault and it's your problem because you're the trustee. And as long as it's open, it still falls under your purview and your responsibility to make sure that everything's all good to go. Okay, so you can see what Gary's thing is. I really like when we create documents that they are basically obeyed, if you will, that they are, they're basically, the effect is actually realized. If the trust says, when I die, give my property to my kids, if it doesn't say hang on to it till they're 30, then you don't really have permission to hang on to it. So if you, as the successor trustee, are just saying, I'm just going to hang on to it because it makes sense, you better get written consent of all the beneficiaries, because if you run into problems, it comes back to the successor trustee, not to the beneficiaries themselves. Creditors don't care about the beneficiaries. Creditors care about what the successor trustee's deal is with them. Okay. So with trusts, I just want it to be done and I want the work to be done. What's supposed to happen when dad dies, we read the trust, and the trust says when dad dies or the first person passes away, then we need to divide up the property. We need to put some in the A trust or the B trust, or we need to determine, is there a way under the law to get out from under the A-B split? Don't just ignore it. There may be some legal process. Okay, now when mom passed away 5 years later, now we really know that the AB trust, if we don't have any choice, the AB should have been split out the 5 years before, when dad passed away, and now mom passes away. We got to figure out what's going to happen with the trust division. You can't just let it sit and ignore it. Mom and dad ignored it, but it was their trust and they were the trustees. You are the successor trustee and it's not your money. It's for the beneficiaries. So now you got to face the beneficiaries if you messed something up, or if the division wasn't done right, the IRS decided to audit, they're not going to accept something, the late election is going to cost some penalties. Those are some things you're going to be watching out as a successor trustee. Now, I would recommend, if you are a successor trustee, get somebody like an attorney like my firm, happy to do it. Find an attorney that does this kind of stuff for a living, that's done a lot of it, and they can help you through the process of distributing the assets, like doing what the trust says. That's so important, because as the trustee, if you get it done right, you can be done with your job. You don't have to have it hanging over your head for the next 2 or 3 or 4 or 5 years. You can just get it done and make those distributions. And 2 things will happen. One is you're going to make the beneficiaries happy because the trust purposes are being carried out. And 2, you're going to be able to get your job done someday as the successor trustee. If you don't have your favorite trust administration, estate planning attorney, I would love to be that person for you. The number is 855-500-TRUST. We'll be back tomorrow with Ken Pecos here on the Word on Wealth and talk all about real estate right here on the Word on Wealth. Thanks everybody for being here. We're here Monday through Friday. Friday coming up, we got a great guest also. We'll see you tomorrow right here on the Word on Wealth.
Tell a friend about the Word on Wealth, featured since 1995. With financial solutions attorney Gary Quackenbush, an expert in estate planning, wills and trusts, and tax problem solving. Gary is past president of the California Society of Tax Consultants. Reach out to us. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. The information you hear on the Word on Wealth is for general information purposes only. This program discusses general financial and legal topics. Seek legal advice from a competent lawyer for your individual legal needs. The opinions expressed here do not necessarily represent the views of Salem Media Group or its sponsors.